On behalf of IDFC Securities, we'd like to welcome the management as well as all the participants on the call. With us from the senior management of United Breweries, we have Mr. Stephen Bosch, CFO, and Mr. Punacha from Finance and Investor Relations. I'll now like to hand over the call to Stephen for his opening remarks, post which we can open the floor for Q&A. Over to you, Stephen.
Yeah, thank you, Herbert, and good morning, good afternoon to everybody on the call, on the Q2 results call. Overall, our performance in the quarter was good. Our volume grew by 17%, with most of the key markets doing well and growing in excess of the beer industry itself. Our market share in Q2 therefore also increased marginally as compared to that of the same quarter of the previous year. Our net revenues grew by 19% on the back of favorable state mix, some price increases, and also strong double-digit premium product growth. Our gross margins increased by 170 basis points in this Q2 versus the second quarter last year, despite the increases in prices for several input materials. And on the back of the continued strong top-line performance in the second quarter, for the half year, our volume grew by 14%. Our net revenue for the first half was up by 15%, with gross margins increasing by around 175 bips versus the comparable period last year. And also our EBITDA for the first half grew quite strongly by 35%. And then look at the regional performance for the quarter, starting with the north. There the industry and also the company grew volumes double-digit. In particular in Rajasthan and also in Haryana, we recorded double-digit volume growth and gained market share there too. Then with the new excise policy in UP, effective in April 18, the industry witnessed volume growth. However, UBL for the first half has been lagging the industry somewhat on account of supply issues. However, if you look at the trend in UP, our ability to supply improved somewhat from Q1 to Q2. So that's a positive trend. Then going to the south, the industry there grew by around 20%, and the company recorded growth in excess of that level. We had good growth in particular in Telangana, Karnataka, and Tamil Nadu. And we gained some market share, in particular in the states of Tamil Nadu and Telangana, whilst conceding marginally some share in the other states in the south. Then in the east, also there we recorded quite strong growth with 17% as against a low single-digit industry growth. And the company gained substantial market share in Orissa and in Jharkhand. In West Bengal, however, the situation for the industry continues to be difficult on the basis of high consumer prices. And also our market share has been under some pressure because of quite strong competitive activity, including higher incentives paid. And finally, for the West region, the industry grew in single digits, and there we recorded similar growth levels as well, so also single-digit growth. And while in Mumbai, the market contracted, in the rest of Maharashtra, the industry was around flat. And overall in the region, it's good to note that the UBL gained market share, particularly thanks to outperformance in Goa and in the rest of Maharashtra, that is without Mumbai. So that's it for the four regions. Then if you look at the total cash flow for the first half year, this has been favorably primarily on account of the higher profitability and also some better working capital management. Outstanding receivables in particular have been lower than expected due to a favorable policy change in Uttar Pradesh and also a change in our business model that we conducted and did in Haryana. And our CAPEX spends are in line with the earlier guidance. We guided for some higher CAPEX levels, and for the full year it's expected to be in the region of around 300 crore. Then finally, we're really pleased to announce that in the month of October, we launched our non-alcoholic beverage. It's Kingfisher Radler. It's a 0.0 flavored malt-based beverage that we produce in our site in Bihar. And the product has now been launched in two states, in Gujarat as well as in Karnataka. And it's early days, but we have had very positive and encouraging responses from the trade and the consumers in the initial weeks after launch. So those were my opening remarks, and I now open the floor to any questions from the audience. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Thanks for the opportunity. My first question is, in this quarter, we have seen most of the liquor companies and the beer company also report good set of numbers. So broadly, are you seeing uptrend in terms of stronger sentiment and overall demand, or you see this is more of a somewhat base effect, or it could come down as a trend in the coming quarters?
Yeah. Indeed, that's a good question. So we see underlying growth being healthy. We do see also a catch-up or kind of an effect of easy comparables still from last year, where the industry was impacted by the highway ban. So that is also coming back in the industry volumes. But on top of that, or let's say as a base effect, the industry is also in many markets showing a healthy trend.
So what has driven the strong gross margin expansion both quarter-on-quarter and YOY? What has come down? Is it somewhat related to the operating leverage, so you are able to get better pricing? Is that what is driving?
So, 2, 3 effects. First effect is that, yes, volume growth, better utilization of our breweries, and also growth in markets in states where we have relatively higher profits or higher sales realization levels. We do see that also we've had some softening of input prices, including rice, sugar, also barley. However, especially for the barley piece, that may in the near future also be a bit more going up. So those prices of barley may actually move up, especially if you see that in the global markets as well already now. So it's the leverage, it's the state mix, as well as some softening of input prices. And where we can, lastly, the premium growth, we also pursue premium growth, and that is also showing double-digit volume growth.
So my next question is, you have done well in most markets, but in Bengal you said because of high prices, the industry volume growth has taken a knock and competition has also increased. Any particular reason why competition has increased there and spends by your competition has increased? Because in a slow market, why is the competition investing more? Normally we see the other way, right? If the buoyancy is there, then every company gives more incentives and more promotions.
Oh, indeed, in West Bengal, the industry has come down because of much higher excise duties weighing on or being passed on into the consumer prices. You see that in a contracting market, there has been a more, let's say, assertive or a more aggressive growth or search of market share. So I do think that the overall competitiveness has gone up, including some local players in the market there as well, that I understand that also are doing relatively well.
And the last question on the non-alcoholic product, is this a case of utilization of your idle asset in Bihar? Is that the main reason? And can you advertise on this on mass media of this product?
So the first bit on Bihar, yes, it is a production unit that we can use. But the main driver, actually the key driver here, is that we see a good demand for this type of product, where we can not only leverage the Kingfisher brand, but also tap into a different type of consumer and go for a different type of consumption occasion. And yes, since this is a 0.0% product, it is it's operating in a totally different environment, right? It's an FMCG environment where advertising, marketing, promotion is as per the overall, let's say, general rules and not restricted by excise.
No, but the brand is same, right? Kingfisher brand only. So you can use that brand and advertise in mass media?
Yeah, it's not a beer product, right? It's a non-alcoholic product. Even if it is a Kingfisher product, it is...
it will be like surrogate advertising.
No, it's a real... This is not a surrogate. This is a real, actual product that we see a lot of growth and opportunity for, and that we will continue to invest in, and we, beyond the launch, look to accelerate growth for.
But you need to create a distribution which is new for this, right? Because this will be targeting new customers, normal mom-and-pop shops.
Correct, yeah.
Have you started on that?
We have a totally different route to market, totally different business line with significant investments and significant growth opportunities. So, that's therefore it's an important event, an important new initiative.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Nitin Kosar from Invesco Mutual Fund. Please go ahead.
Hi, sir. I think I missed on the distribution structure or distribution network commentary that you gave on Redler. Does it mean that we have to set up a different distribution network or total different distribution infrastructure for Redler?
So yes, the point is that for the non-alcoholic products, we cannot use the existing route to market that we have for beer, because beer is going through a separate route to market, and we're working with established parties, established distribution partners that we deploy, that we work with to get this product across India, ultimately. But we start with a couple of markets and have a rollout plan in the coming period.
Okay, got it. And so what was the reason for us lagging behind growth in UP state?
So UP state, there has been a new policy, a new excise policy that started in April. We saw in the first part of the first half year, so the first couple of months, we saw a totally new universe of wholesalers, of licensed operators that had to be onboarded. And then secondly, there has been capacity constraint in the state of UP, and that's a state where we work with a contract production unit. So we have been working hard to import our beer as well to meet the demand. We could not meet all demand there, and still we see some restrictions also from the excise in terms of permits for production as well as logistics.
Okay, and when do you think this should get sorted out?
Already we see that we have a better scenario that we looked at in Q2 rather than Q1, and we believe in the months to come this will further be improved.
Okay. And so one last question. If I were to see EBITDA per case, we have seen a structural change over the last 4 or 5 years. The existing EBITDA per case that we have been doing for the last half a year or maybe for last 2 quarters, is this one should be looking as a new normal, new base?
There is a couple of cautionary points to make. So I would think that if you look at this current half year, we have had benefit of, as per the earlier answer I gave on an earlier question, is that there's been some softening of input prices that we've benefited from. We've had benefit of better capacity utilization because of growth coming back in. We've had overall positive operating leverage, and there's been the positive state mix that we've also had. That can also all these points could change, right? I think the particular point to highlight is that commodity prices, energy prices, foreign exchange all have moved in the, let's say, not a positive direction. So there may be in the coming quarters or also next year, the effects may become more apparent. So yes, we've been doing well thanks to these points, but there is also some caution when I look at the outlook. And the same is true for state mix. As you know, the state contributions fluctuate from quarter to quarter. That has an impact on the EBITDA per case.
Right, sir. Thank you.
Thank you. The next question is from the line of Krishnan Samurthy from Motilal Oswal Securities. Please go ahead.
Yeah, hi. Congrats on a great set of numbers. My first question is regarding industry volume growth for the quarter. You grew by 17%. How much was the industry growth?
14%, 1/4.
14, okay. The second question is regarding margins on a sequential basis. Typically, Q2 tapers up significantly, anywhere between 400 to 600 bips compared to Q1, where traditionally your margins are the highest. Were there any one-offs for this particular quarter, or is the seasonality a thing of the past?
Sir, you want to comment?
No, there are no one-offs which are giving a higher profitability in the Q2.
Okay. So, but is the seasonality lesser than compared to previous years, or is that seasonality reducing compared to preceding years? Because earlier you used to have anywhere between 400 to 600 bips margins down sequentially. Last year it was lesser than that, and this year it's actually only about 60 basis points.
You're talking about the margins earned in the quarter vis-a-vis?
Yes, 21.5 was the margins in Q1. It is 20.9 for this particular quarter.
Okay, so your query is why the margins in the current Q2 is higher than?
Yeah, is the seasonality not as stark as what it was in the past?
Wait. Seasonality has only some effect to the margins because, right, seasonality has got effect to the extent that it changes the state mix. But however, as Steven confirmed during his introduction, that we have had softer input prices,
sure,
so I have better profitability.
Okay.
That is the second.
Yeah, okay, got it. Thanks a lot.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Yeah, hi. Good afternoon. The first question is, you mentioned that you had very rapid 20% growth in South India and market share gains in a couple of the states there. Any specific reasons you'd attribute that to?
Repeat the question. Any reason, sorry?
Any reason for the very rapid growth in South India where you mentioned the volume growth was almost 20% and you gained market shares in two states, you mentioned Telangana and Tamil Nadu?
So I think that, yes, the growth is good for both sustainable. It looks like we have an underlying trend. I think in Tamil Nadu as a market there has been, it was a market that was also very much impacted by the highway ban last year. So therefore the overall sentiment is now much better than last year. The same is true in a market like Kerala and in Telangana. I think we've seen over the last year quarter good growth. Now our share is going up, I think, primarily because of our strong brands. Ultimately, some local competition having a difficult period, so maybe some local brands that are just having lesser appeal. But overall, I think our share is more or less, if you look at the pan-Indian market, it's marginally up. So there's some movements here and there, but it's overall moving in the right direction.
Understand. And is there any specific premiumization differences between the regions? So is there any region that is seeing premiumization faster than the others?
Well, the big metro areas is where you see the fastest growth of and the biggest existing volume for premium. It includes Delhi, it includes Mumbai, but also Bangalore and Hyderabad. So that's a bit of it's not that there's a particular region. This is the most important trend.
Okay, thanks. And my last question is on imported raw materials. What proportion of your total input costs are imported?
Input costs? What percentage of input material?
Yes.
Less than 10%.
Okay, that's less. And do you have any hedging policy here in terms of your currency?
Yeah, we do.
Okay, so you that's the reason you did not see any meaningful impact in the previous quarter, right?
Yeah, we normally don't leave our forex positions exposed.
All right, thank you. That was very helpful.
Thank you. The next question is from the line of Ashit Desai from MK Global. Please go ahead.
Yeah, hi Stephen, hi Punacha. My question is again on margins. You called out some inflation going ahead. So what is the inflation that you are seeing in your input basket, and what are the drivers that you have to offset this kind of inflation going ahead?
So we are not immune to the overall macro trends, right? So whether it is glass or can prices or barley prices, there is an upward trend. Difficult to give you an exact percentage, and I want to refrain from it, but I would think that we have measures in place to also counter it, to have local production, to have import opportunities, to have hedging, and also to negotiate terms and conditions with our key suppliers. But yes, ultimately, some of it will hit the P&L if there is commodity or energy price growth.
Okay. And normally you buy barley at the beginning of the year, your full year requirement. So is that so this year also, or you've changed your buying pattern this year?
Correct. So barley we do buy. We have on our balance sheet. We have the barley we require. We're more or less covered for the coming quarters. And what we do is that in addition to domestic sourcing, there is also import of barley whenever required or whenever opportunistic or attractive to do.
Okay. And secondly, you commented on two states. One is AP, where the industry has grown, you haven't grown. And you talked about some changed business model in Haryana. Can you just elaborate more on these?
So Haryana, in a couple of the earlier quarters, we have also mentioned that in Haryana we have appointed a new distributor that is working for us. That we work with to also work the market and improve as well our working capital. That is, I think, an important piece in Haryana, where we see that we give a relatively short period in terms of receivable or in terms of the credit periods to our distributor, who will then sell on to the market. So that's a different distribution model. And I think you mentioned UP.
AP, Andhra Pradesh, Steve.
There is AP is relatively is going well. There are some quarter-to-quarter changes, but I don't think that there's any particular trend to comment on.
Okay, and was it a procurement issue, one-off, or is there more a competition that's driving lower growth for you?
Lower growth where?
Andhra Pradesh.
I don't think that Andhra was called out as a state in my opening remarks.
It's UP, I think it is UP.
Telangana, we saw actually positive in terms of growth, and that is both our market share as well as market. AP, I have got no significant trend or significant one-off to comment on.
Okay. And what will be your investments in non-alcoholic beverage? I mean, what are the kind of ad spends and distribution investments that one should build in over here?
It's on non-alcoholic beverage?
Yeah.
You mean to say capital expenditure?
No. Investments towards branding and distribution.
Distribution, like Stephen mentioned, is a different setup, wherein we have hired two large distributors who are in the FMCG field already. And as you know, non-alcoholic will be under central excise and not state excise. The entire team and the operations are very different. It's a different business segment itself. So, capex-wise, we are using the Bihar brewery to produce, so there will be no capex spend on that. With regard to advertisements, yes, there are some advertisements, but then it will not be something which will enhance our expenditure. It will come within our overall ad budget. Reason being, the brand is the same.
Okay. One last question, if I may. I mean, there have been recent news on the CCI probe. So, any comments you can make on that? And given that two of the competitors are loss-making, I mean, what kind of cartelization CCI is proving?
So, yes, so indeed there has been these news reports. Yes, the CCI is reviewing certain pieces of information or data that they have collected from the industry participants. Yes, we will. It's a bit premature to comment at this time. As you know, we operate in a very regulated environment. Every state has a different set of regulations. But we will fully cooperate. We will fully continue to investigate. And also, it's good to know that we are also taking compliance very seriously. But it's a bit too premature to make any further comments on this particular situation.
Okay. Thanks and all the best.
Yeah, sir.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Himanshu Shah from HDFC Securities. Please go ahead.
Thanks, sir. Thanks for the opportunity and congratulations on good set of numbers. So can you just provide some color on our capex? What exactly we spent on around 300 crore every year, 250 to 300 crore? Is this more like a maintenance capex or it is for expansion of brewery lines? If you can just provide some color on that.
If something is with respect to maintenance, it will not go on capex, it will go under the repair budget. Reason being, under accounting standards, we can only capitalize additions and we can't capitalize refurbishments unless it extends the life of the asset. So the life of the brewing asset is by and large fixed. So whatever expenditure is there is towards expansion and towards certain capital equipments and capital expenditure needed to maintain statutory compliances.
Okay. And this would be the run rate, like 250 to 300 crore on a consistent basis?
Yeah. If you're looking at high single-digit growth, 250 to 300 crores is the kind of capex which will be needed to give you the enhanced capacity to source this high single-digit volume growth. And for, as we call it, maintenance capex, that is capex to maintain your quality, your efficiencies, and statutory compliances.
Okay. Thanks. So secondly, on the non-alcoholic beverage business that we have entered, can you provide some color? Where can we see this business over the next 3 to 5 years, like in terms of size and scale? Like what is the opportunity size and what would be like we would be targeting at in terms of our market share or overall position?
You are asking about the future of just one baby. All we can say is we are very confident that this segment has a bright future. So then you ask us to quantify today, it's very difficult to do so.
Okay, fine, sir. No issues. Thanks a lot. That's it from my side.
Thank you. The next question is from the line of Chirag Lodhia from Value Quest Research. Please go ahead.
Hi, congratulations on good set of numbers. So my first question is on how big is UP market industry-wise and what would be our market share?
Sorry, be a little loud, please.
How big is UP in terms of volume, industry volumes?
What, the market share for the half year ended?
No, I just wanted to understand UP, Uttar Pradesh market size.
Uttar Pradesh as a salience of the country?
Yes.
It's about 7-8% salience.
And at what rate it would be growing in, say, first half?
First half, it will be growing high single digit or just the double digit.
And our market share would be, sir?
Our market share in Uttar Pradesh is
around 40%.
just under 50%.
Just under 50%. Okay. And just lastly on this UP market, what exactly business model has changed in terms of realization, how it has improved, and working capital, what has exactly happened?
See, there is no change in business model. There is a change in the excise policy. In the past, the excise policy allowed one large monopolistic player.
Correct.
The new excise policy, effective April 1, 2018, has ensured that there are many players and that there is no one large monopolistic buyer. Thereby, the credit norms or the norms under which you supply to the market is fairly favorable, where they're getting money almost at the time we supply beer. So, in the past it used to be at 60 plus days of collectibles, which is now less than a week's in the collectible days. So that's the working capital advantage we have got in UP.
Okay, and all our supply chain has been stabilized now, right?
Supply chain meaning?
Supply. So in the first quarter there was issue of demand fulfillment.
Issues with respect to having sufficient capacity for supply in the first quarter, which has been by and large addressed in the second quarter.
Okay. And so just one basic question. One case of beer is equal to how many liters?
7.8. That is, if you're taking about a case of 650 ml bottles, 12 bottles gives 7.8 liters. We're talking about 330 ml bottles, we're talking 330 into 24, which is also close to 7.8 or 7.95. So that's the thing. So talking about cans, yes, we have 500 ml cans where it is 12 liters per case, but 95% of our volumes is at 7.8 liters.
Okay, got it. Thank you and all the best.
Thank you. Any participants who would like to ask a question at this time, they may please press star and 1. We have the next question from the line of Raj Gandhi from Victory Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Two questions really. One is, could you give some color on, the regional mix of how our sales and volume growth is turning out? And what I mean by regional mix is between urban India and say rural India. Would you have some color on how much percentage of sales come from say the key metros versus say the non-metro regions, and what is the percentage growth rate differential between the two regions? And also, is there a trend which you're witnessing where the Kingfisher brand is facing some fatigue in key metro areas? I read from your press release that Mumbai is flat, Delhi is flat. So is it the case that the brand is facing some fatigue in key metro regions like Mumbai, Delhi, and because of competition or whatever, and in the non-urban centers the brand is still pretty strong? If you could give some color on these two aspects.
I will take this question. Now, we have not gone about classifying the growth in the way you are trying to segment it, that is urban and non-urban. Well, we have close to 75 to 80,000 outlets, which are by and large in urban and semi-urban areas. So we have gone about tracking this, but not on the basis of urban and semi-urban. With respect to your question, whether there is fatigue of the brand in urban areas or in metros, the answer would be competition or new entrants by and large enter the metros first. So you will see the effects of competition there. And when competition enters, they enter with huge discounting and bleeding their own balance sheet. So that temporary effect will be there on the Kingfisher brand volumes in the metros. That's what you're saying.
Add to that, I think that if you look at the key metros, the trends, the more recent, not only the quarter, but if you look back a little longer, then I think it's been a healthy trend, especially in a place like Delhi. And Mumbai has been more or less stable. So I think across the market and beyond these two cities also, the Kingfisher brand is holding up well.
Understood. And just from a pure penetration, perspective, do you think there's more room to spread these number of outlets more deeper into the country? I mean, which in turn leads to a better volume growth over a period of time.
We are in a industry where getting licenses is not easy.
Right.
With the Kingfisher brand, right, and our other brands, our penetration levels are already very high. So Kingfisher is basically in virtually all beer outlets.
Understood. Cool. Thank you.
Thank you. The next question is from the line of Manish Poddar from Reliance AIS. Please go ahead.
Hi, sir. I have a couple of questions. So first thing, if I get my numbers correct, in Q1 of this year, your volume growth was 12% and your realizations are, marginally down, if I remember. So, and if you say this volumes is 14% this quarter, have you got any material price increase this quarter? Or it's largely state mix and product mix?
No, but this quarter there was maybe one or two small markets where we had some price increases, but nothing major. Then again, revenue growth or realization per case growth or degrowth is subject very much, or is subject to these dates. That is quite important.
To answer you, we had a price increase in Telangana, which was effective in the first quarter itself. That has a salience to the country volumes. In the second quarter, the salience of Telangana has been far higher than the first quarter.
And Yes, sorry.
Sorry, could you hear me?
Yeah, it's better now.
Yeah, I said we got a price increase in Telangana in the first quarter, but as a volume salience, in the second quarter, the volume salience of Telangana is higher than the volume salience in the first quarter, vis-a-vis all India volume salience, Telangana salience we're talking about. So this will give you a favorable state mix with respect to higher realization. So that's what you're seeing.
Yeah, I remember you used to mention this, your volume growth guidance of 6 to 8% from a medium-term basis. But if I look at this quarter, despite the base, this restocking in a way, or the base impact which we are saying, your 2-year volume growth is about 14%. So should one anticipate, this trajectory? Is there any change in the material consumption, or, you still call out that 6 to 8% is the volume growth trajectory which one should anticipate?
So, you are right with respect to your first sentence that our volume trajectory will be in that high single digit. The current trajectory of the first half looking higher is, as Stephen mentioned before in his thing, is we had the base effect, wherein we had easy comparables, a lot of issues in the first half. So the comparisons have been easier.
And just one final one, if I may. When you're saying that EBITDA per case would go down largely because of input cost inflation, you are saying the operating deleverage would not incur materially in the second half of the year.
Sorry, your question is not clear.
So you mentioned there are 3 variables which actually determine your EBITDA margins. So one is the state or the product mix. Second is better volumes giving you better operating leverage, and third is the raw materials. Yeah. And you said the concern is largely on the raw materials which you are facing. Yeah. So is my understanding correct that you are pretty much confident on the other 2 variables in the? So what I'm trying to infer is primarily your EBITDA per case.
You are right. The input prices going up.
Okay, fine. Thank you so much.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, on the volume growth side, if I just try to read the past conference calls that you have conducted, you've always mentioned that the volume growth should be about single digit. When I'm hearing this call as well, you are pointing out to a single digit volume growth incrementally. Why this pessimism for this particular product category where, there are a lot of consumer product categories that have actually grown double digit. This product category has the potential to grow double digit in a country like India. So comments there. And second, when you called out single digit, in the first half you have double digit volume growth, and I don't see any base on a 2-year basis. So if you could give some comments there as well.
Yeah. If you see the trend the last 5 years, there's been a drop and there's been an increase. And if you take a CAGR, it is high single digit. Okay?
Sorry?
If you take the CAGR of growth last, that is the CAGR growth, average growth, the last 5 years.
Yeah.
It is high single digit. Right?
Perfect.
Okay. Now, if you look at the first half of the last financial year, we had low single digit. So as such, the growth in the first half of last financial year was lesser than the CAGR. So meaning to say, when we are having 14% growth in the first half this year, which is above your single digit growth, is the reason that the base effect has shown this high growth. And going forward also, yes, we are buoyant and bullish about the prospects of the industry. But to say that we are going to move away from high single digit to say mid double digit, it's being too optimistic.
Okay. And when you are saying it was low single digit in first half, what was your volume growth in first half last year?
I don't recollect, but I know it's not more than 5-6%. So
not more than
5-6%.
Yeah, because your growth for full year was about 10%, which means second half last year would have grown a double-digit number, and first half of this year you have grown a double-digit number.
But again, it's important to stress that the growth trajectory that we give is a medium-term target. I think also one of the earlier calls mentioned that towards the second half of this year, there are also some possible risks, especially related to election time, and of course national elections, but also some key states where there will be state elections. And you see that there is normally quite some disruption when it comes to alcohol, when it comes to beer as well, from these events, and therefore clamping down on sale or having dry days or what have you. And then I think also what we're saying is that quite a number of markets where you see sudden changes in the regulatory landscape, in the excise rules, steep excise duties, or any other measures that typically impact demand, that we don't rule out. And we always keep in the back of our mind that certain states will be affected by these measures, therefore impacting overall opportunities for UBL to grow. And lastly, I think, yes, while the industry growth we have always flagged at high, or let's say 6 to 8% growth, we also said at the same time that we're confident that we should do better and maybe towards the low double digit or higher single digit.
Okay. Thank you, sir.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the follow-up question from the line of Krishnan Sambamurthy from Motilal Oswal Securities. Please go ahead.
Yeah, my questions have been answered. Thank you.
Thank you. The next question is from the line of Harit Kapoor from IDFC Securities. Please go ahead.
Yeah, hi. Just two questions on the new launches. So, firstly, on Radler, assuming you see a good performance in your test market launch, do we expect a full-fledged launch in terms of a national launch in FY20? Is that the way it should work?
Exactly, Harit. Yeah. So we want to accelerate this. So clearly, after pilot markets, we want to further accelerate and grow the presence of the product across the markets.
Okay. And if you could just comment on, it's been about 2 quarters for even Amstel, and how's that been received in the marketplace?
Yeah. So Amstel, we've now rolled out in 3 or 4 states. So that is, and in each of these states, the response has been positive. So it's really also positioned as an international premium strong beer, which we didn't have yet. So it's really an additional, it complements really the portfolio. And of course, it's a new brand, so we're also investing behind it to support and build the brand. But clearly, the response and the pickup of the brand has been encouraging.
And what was your premium brand's growth for the first half, or probably for Q2, whatever number you have, because as compared to your overall growth, what would have been premium brand's growth?
It's a really strong double digit, so it's north of 30%.
30%. Last question really was on the, you spoke about the election also coming up, so dry days, etc. Have you already started to see some of that impact in Q3, given there are a few states which are coming up for election?
I mean, we have Chhattisgarh coming, and we'll have Madhya Pradesh there. There will be some effects.
And apart from dry day, is there any supply chain issue there that we're facing, etc.?
Supply chain issues, I mean, yes and no. I mean, if there is a kind of a local excise notification saying that supplies are curtailed, it will. But we can't sit here and imagine what happens. So we just, like we saw the last elections in Karnataka, I mean, consumers were not allowed to carry more than a couple of bottles of beer when they left the retail outlet. So things like this are replicated elsewhere. It could have an effect on the volumes.
Okay. Last question really was on the East market. You said ex-West Bengal growth has been very good. Are we gaining there from the regional players, or it's a share gain from national players itself?
What did you say, West Bengal?
No, you said East growth was strong, as compared to, apart from West Bengal, the growth in East was strong for you, and you gained market share. Is that gain coming more from national players, or is from some regional players there?
We have gained in Orissa. We have grown very well and have gained market share in Orissa. And if you take the East, we have grown strongly, excluding West Bengal.
Okay. Yeah, that's it from me. Thanks.
Thank you. We have the follow-up question from the line of Chirag Lodhia from ValueQuest Research. Please go ahead.
So what percentage of our sales come from premium portfolio, and how we classify the same?
So that is a mid-single digit contribution. It's growing actually fast. That is everything in excess of the Kingfisher premium or Kingfisher strong brand. So that is, it contains multiple brands, right? So it's Amstel, it is Ultra Max, it's Kingfisher Storm, it's Heineken, some import brands, and those represent the portfolio where we have higher price index than the Kingfisher brand itself.
Got it. And second question on what are the import taxes? So you said in first quarter you were importing from other states. So what is the price differential manufacturing, say in UP, or importing from other states? What is the price difference?
I think the main issue there with importing and exporting your beer is that it will attract import and export duties, import and export pass fees, as they are called.
Correct.
And those differ very much from state to state, but clearly that is leading to inefficiencies. And on top of that, you have, of course, as always, more freight, more kilometers of freight.
Right.
Really those levels of import duties, export duties differ from state to state.
But generally, so taking an example of UP, if you can just highlight what is the difference for a particular state, it will be helpful.
It can be in a range of 50 to 100 rupees per case, for instance, but it really differs from state to state.
What's the specific question? Which state you want to know?
UP, say example UP.
I can only check it. I mean, it should be, the import pass fee in UP is a little high. So if I source it locally, we make money. That is, we make a margin there. If you bring it from outside the state, the entire margin is wiped out.
Okay. And lastly on A&P spend, what has been the A&P spend for first half vis-a-vis last year, and on a full year basis, what we are going to spend?
A&P spends are in line with last year as a percentage of the top line.
Okay.
Nothing different.
And on a full year basis also will be maintaining the percentage?
It will be, there will be no change in trend.
Oh, okay. Thank you and all the best.
Thank you. See the next question from the line of Palak Shah from Reliance. Please go ahead.
Hi, sir. First is a good set of numbers. Just one question. Recently there was a news article.
I can't hear you. You're not audible.
Can you hear me now?
Yeah.
Not a good set of numbers. Just one question is related to the antitrust or anti-commission issues that were raised against all the three top players of the beer industry. Any update on that?
I already answered this question.
I'm sorry, I would have missed that.
Yeah, so but basically, it's premature. It's quite early days after the news broke, and sort of we're working to cooperate and provide data and taking compliance seriously. So there's no further update from our side on this call.
Thank you so much.
Thank you. A reminder to participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next, ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Harit Kapoor for closing comments. Thank you, and over to you, sir.
Yeah, thanks, Aman. On behalf of IDFC Securities, would like to thank all the participants as well as the management to spare their time for the call. I'll hand over to Stephen for his closing remarks.
Yeah, great. Thank you so much, everybody. Thanks for attending the call, and look forward to the next occasion. Thank you. Have a good day.